Hello friends, how are you? I hope you are also well. Today I want to show you what is cryptocurrency and how to make money from cryptocurrency. So let's be details. Crypto currency or crypto is any form of currency that exists digitally or virtually and uses cryptography to secure transaction. Cryptocurrencies don't have a central using or regulating authority. Instead, using a decentralized system to record transactions and issue new units. What is cryptocurrency? Cryptocurrency is a digital payment system that doesn't rely on banks to verify transactions. It's a far-to-far system that can enable anyone, anywhere to send and receive payments. Instead of being physical money carried around and exchanged in the real world, cryptocurrency payments exist purely as digital entries to an online database describing specific transaction. When you transfer cryptocurrency funds, the transactions are recorded in a public ledger. Cryptocurrency is stored in digital wallets. Cryptocurrency work. Cryptocurrencies run on a distributed public ledger called blockchain, a record of all transactions updated and held by currency holders. Units of cryptocurrency are created through a process called mining, which involves using computer power to solve complicated mathematical problems that generate coins. Users can also buy the currencies from brokers, then store and spend them using cryptocurrency wallets. If you own cryptocurrency, you don't own anything tangible. What you own is a key that allows you to move a record or a unit to measure from one person to another without a trusted third party. Although Bitcoin has been around since 2009, cryptocurrencies and applications of blockchain technology are still emerging in financial terms, and more uses are expected in the future. Transactions including bonds, stocks, and other financial assets could eventually be traded using the technology. Dear friends, now let's see cryptocurrency examples. There are thousands of cryptocurrencies. Some of the best known include, I want to show it. Its first one, Bitcoin. Founded in 2009, Bitcoin was the first cryptocurrency and it is still the most commonly traded and its trusted cryptocurrency site. Bitcoin is the most popular in countries. The currency was developed by Satoshi Nakamoto, widely believed to be a and its individual or group of people whose precise identity remains unknown. Developed in 2015, Ethereum is a blockchain platform with its own cryptocurrency, called either ETH or Ethereum. It is the most popular cryptocurrency after Bitcoin. Next is Litecoin. This currency is most similar to Bitcoin but has moved more quickly to develop new innovations, including faster payments and progress to allow more transactions. Ledger system that was founded in 2012. Ripple can be used to track different kinds of transactions, not just cryptocurrency. The company behind it has worked with various banks and financial institutions. Non-Bitcoin cryptocurrencies are collectively known as altcoins to buy cryptocurrency. You may be wondering how to buy cryptocurrency safely. There are typically 3 steps involved. These are: step 1, choosing a platform. The first step is deciding which platform to use. Generally, you can choose between a traditional broker or dedicated cryptocurrency exchange. Brokers. There are online brokers who offer ways to buy and sell cryptocurrency, as well as other financial assets like stocks, bonds, and ETFs. These platforms tend to offer lower trading costs but fewer crypto features. Second option is cryptocurrency exchanges. There are many cryptocurrency exchanges to choose from, each offering different cryptocurrencies, wallet storage, interest-bearing account options, and more. Many exchanges charge asset-based fees. Comparing different platforms, consider which cryptocurrency are on offer, what fees they charge, their security features, storage and withdrawal option, and any educational resource. Step 2 is funding your account. Once you have chosen your platform, the next step is to fund your account so you can begin trading. Most crypto exchanges allow users to purchase crypto using fiat, i.e., government issued currencies such as the US dollar, the British pound, or the euro using their debit or credit cards, although this varies by platform. Crypto purchase with credit cards and considered risky, and some exchanges don't support them. Some credit card companies don't allow crypto transaction either. This is because cryptocurrencies are highly volatile, and it is not advisable to risk going into debit or potentially paying high credit card transaction fees for certain assets. Some platforms will also accept ACH transaction, transfer, and wire transfer. The accepted payment methods and time taken for deposits or withdrawal different per platform. Equal the time taken for deposits to clear varies by payment method. An important factor to consider is fees. These include potential deposit and withdrawal transaction fees plus trading fees. Fees will vary by payment method and platform, which is something to reach at the outside. Step 3 is placing an order. You can place an order via your broker or exchanger's web or mobile platform. If you are planning to buy cryptocurrencies, you can do so by choosing the order type, entering the amount of cryptocurrencies you want to purchase, and confirming the order. The same progress applies to sell orders. So there are also other ways to invest in crypto. These include payment service like PayPal, Cash App, and Venmo, which allow users to buy, sell, or hold cryptocurrencies. In addition, there are the following invest vehicles: Bitcoin Trust. You can buy share of Bitcoin Trust with a regular broker's account. These vehicles give retail investors exposure to crypto through the stock market. Bitcoin mutual funds. There are Bitcoin ETFs and Bitcoin mutual funds to choose from. Third, blockchain stock or ETFs. You can also indirectly invest in crypto through blockchain companies that specialize in the technology behind crypto and crypto transaction. Alternatively, you can buy stocks or ETFs of companies that the blockchain technology. The best option for you will depend on your investment goals and risk appetite. Cryptocurrency. Once you have purchased cryptocurrency, you need to store it safely to protect it from hacks or theft. Usually, cryptocurrency is stored in crypto wallets, which are physical devices or online software used to store the private keys to your cryptocurrency securely. Some exchanges provide wallet service, making it easy for you to store directly through the platform. However, not all exchanges or brokers automatically provide wallet service for you. There are different wallet providers to choose from. The terms hot wallet and cold wallet are used. Say, hot wallet storage is hot wallet refer or crypto storage that uses online software to protect the private keys to your assets. Now is cold wallet storage. Unlike hot wallets, cold wallets, also known as hardware wallets, rely on offline electronic device to securely store your private keys. When it was first launched, Bitcoin was intended to be a medium for daily transaction, making it possible to buy everything from a cup of coffee to a computer or even big ticket items like real estate. That hasn't quite materialized, and while the number of institutions accepting cryptocurrency is growing, large transactions involving it are rare. Even so, it is possible to buy a wide variety of products from e-commerce websites using crypto. Here are some examples. Technology and e-commerce sites. Several companies that sell tech products accept crypto on their websites, such as Newegg.com, AT&T, and Microsoft. Overstock, an e-commerce platform, was among the first sites to accept Bitcoin. Shopify, Rakuten, and Home Depot also accept it. Retailers accept crypto as a form of platform. For example, online luxury retailer BDLs offer Rolex, Patek Philippe, and other high-end watches in return for Bitcoin. Cars. Some car dealers, from mass market brands to high end luxury leaders, already accept cryptocurrency as payment. Insurance. In April 2021, Swiss insurer AXA announced that it had begun accepting Bitcoin as a mode of payment for all its lines of insurance except life insurance due to regulatory issues. Premier Shed Insurance, which sells some and auto insurance policies in the US, also accepts Bitcoin for premium payments. So, if you want to spend cryptocurrency at a retailer that doesn't accept it directly, you can use a cryptocurrency debit card such as BitPay in the US. These are usually built using blockchain technology. Blockchain describes the way transactions are recorded into blocks and time-stamped. It's a fairly complex technical process, but the result is a digital ledger of cryptocurrency transactions that are hard for hackers to tamper with. In addition, transactions require a two-factor authentication process. For instance, you might be asked to enter a username and password to start a transaction. Then you might have to enter an authentication code sent via text to your personal cell phone. While securities are flash, that does not mean cryptocurrencies are unhackable. Several high-dollar hacks have caused cryptocurrency startups heavily. Hackers hit CoinHack to the tune of $534 million and BitGrill for $195 million, making them two of the biggest cryptocurrency hacks of 2018. Black money, the value of virtual currencies is driven entirely by supply and demand. This can create wild swings that produce significant gains for investors or big traditional financial products like stocks, bonds, and mutual funds. Four tips to invest in cryptocurrency safely. According to Consumer Reports, all investments carry risk, but some experts consider cryptocurrency to be one of their riskier investment choices, but there. If you are planning to invest in cryptocurrencies, these tips can help you make educated choice. First of all, research exchanges. Before you invest, learn about cryptocurrency exchange. It's estimated that there are over 500 exchanges to choose from. Do your research, read reviews, and talk with more experienced investors before moving forward. Second, know how to store your digital currency. If you buy cryptocurrency, you have to store it. You can keep it on an exchange or in a digital wallet. While there are different kinds of wallets, each has its benefits, technical requirements, and security. As with exchange, you should investigate your storage choices before investing. Number 3, diversify your investments. Diversification is the key to any good investment strategy, and this holds true when you are investing in cryptocurrency. Don't put all your money in Bitcoin, for example, just because that's the name you know. There are thousands of options, and it's better to spread your investment across several currencies. Please prepare for volatility. The cryptocurrency market is highly volatile, so be prepared for ups and downs. You will see dramatic swing in prices. If your investment portfolio or mental well-being can't handle that, cryptocurrency might not be a wise choice for you. Cryptocurrency is all the rage right now, but remember, it is still in its relative infancy and is considered highly. Investing in something new comes with challenges, so be prepared. If you plan to participate, do your research and invest money by trading cryptocurrency pairs. Hodling, invest in cryptocurrency and hold long term. Play to earn crypto games. Earn rewards for playing crypto games. Crypto yield farming and lending generate an attractive FA on your cryptocurrencies. Is cryptocurrency safe? Cryptocurrency are usually built using blockchain technology. Blockchain describes the ways transactions are recorded into blocks and time-stamped. It's a fairly complex technology processes, but the result is a digital ledger of cryptocurrency transactions that's hard for hackers to tamper with. In addition, transactions require a two-factor authentication process. For instance, you might be asked to enter a username and password to start a transaction. So then you might have to enter an authentication code sent via text to your personal cell phone. While securities are in place, that does not mean cryptocurrencies are unhackable. Several high-dollar hacks have cost cryptocurrency startups heavily. Hackers hit CoinCheck to the tune of $534 million and beat Grail for $195 million, making them two of the biggest cryptocurrency hacks of 2018. Unlike government-backed money, the value of virtual currencies is driven entirely by supply and demand. This can create wild swings that produce significant gains for investors or big losses. And cryptocurrency investments are subject to far less regulatory protection than traditional financial products like stocks, bonds, and mutual funds. 4 tips to invest in cryptocurrency safely. According to customer reports, all investments carry risk, but some experts consider cryptocurrency to be one of the riskier investment choices choice out there. If you are planning to invest in cryptocurrencies, these tips can help you make educated choices. Research exchanges. Before you invest, learn about cryptocurrency exchanges. It's estimated that there are over 500 exchanges to choose from. Do your research, read reviewers, and talk with more experienced investors before moved forward. Cryptocurrency is created through mining, which is a process of very complex problems being solved by powerful computers, usually as a reward for making successful cryptocurrency transactions. In other words, the exchange of cryptocurrency often results in more cryptocurrency being introduced in the world. Many cryptocurrencies, the blockchain for managing and recording transactions, wherein multiple entities maintain identical transaction record, making it an extremely secure technology for your investment. The investors who do appreciate the blockchain technology and have specific views about which aspects of it are going to become major in the years to come can invest in specific cryptocurrencies that are the basis of those aspects, said Swapnil Pawar, founder ASQI advisor. The total worth of the cryptocurrency markets as of May 2021 is a whopping $1.7 trillion. There are over 10,000 listed cryptocurrencies at the time of writing, and this number is only bound to increase. Out of this, Bitcoin has the largest share in terms of market capitalization, amounting to about $650 billion, followed by Ethereum and Tether. Acceptance of cryptocurrency around the world has been on the increase for many years now. For example, when a major US online retailer Overstock.com started accepting Bitcoin in 2014, it made $124,000 in Bitcoin sales on the first day itself. Bitcoin, the game changer. Bitcoin emerged as a gold rush of opportunity when the world realized problems with the existing financial systems after the 2008 crisis. It was the very first crypto developed through blockchain and perhaps changed the way people thought about money. In 2013, Bitcoin was recommended as the best investment by Forbes. Today, it has become a household name. As quoted by Deloitte, over 2013 US business accepted Bitcoin as a mode of payment in late 2020, making it an attractive asset to hold for a common man. Why invest in Bitcoin? In addition to being highly secure in nature, Bitcoin is also far P2P, which means it involves no intermediary, such as a bank or credit card agency, and offers a minimal transaction cost. It is fast and fully transparent. For instance, every Bitcoin transaction you make are recorded in a public ledger that is visible to all. It cannot be certificate or it is fast and fully transparent. For instance, every Bitcoin transaction you make is recorded in a public ledger that is visible to all. What is blockchain in cryptocurrency? Although blockchain appears to be sophisticated as it can be, its core notion is pretty simple. Database or blockchain is short of digital ledger. To comprehend the concept of blockchain, it is necessary to first understand what a database is. A database is a collection of data saved on a computer system in an electronic format. Distributed ledger technology (DLT) is a decentralized database that various network participants administer. Blockchain is a type of DLT where transactions are recorded using a hash, which is an immutable cryptocurrency signature. That means that if a single block in a chain is modified, it will be immediately clear that the chain has been tampered with. Private and centralized blockchains, on the other hand, exist in which all of the computers that make up the network are owned and operated by a single company. Popular cryptocurrencies such as Bitcoin and Ethereum are built on blockchain technology. Blockchains like Bitcoin and Ethereum are constantly growing as new blocks are added to the chain, increasing the security of the ledger dramatically. Blockchain versus cryptocurrency, are they the same? Decentralized platforms that require a coin can be enabled via blockchains. The blockchain is the distributed ledger technology that allows a network to maintain consensus. The network can track transactions and transfer value and information due to distributed consensus. Blockchain technology can be conceived as a form of next-generation business process optimization software from a business standpoint. Collaborative technology such as blockchain promises to improve business procedures between firms, cutting the cost of trust dramatically. As a result, it may provide such better returns per dollar invested than most traditional internal investments. Cryptocurrencies are the token used to convey value and pay for transactions within blockchain networks and to offer networks incentives. Furthermore, you might think of them as a blockchain tool that can be used to serve as a resource of service or even to digitalize asset ownership. How do they buy cryptocurrency? Given the phase of crypto adoption, there are a number of ways to buy cryptocurrencies. Crypto native exchanges offer a plethora of different digital assets for buying and selling. In the mainstream world, PayPal serves as one example platform on which participants can buy and sell certain digital assets. Crypto ATMs such as Bitcoin ATMs also exist in various parts of the world. As far as payment for assets goes, platforms offer crypto purchase via bank transfers, crypto transfers, or credit cards. Depending on the platform, buying crypto with cash in a person-to-person fashion is also possible. Are cryptocurrencies a good investment? Cryptocurrency is a good investment if you want to gain direct exposure to the demand on digital currency, while a safer but potentially less lucrative alternative is to buy the stock of companies with exposure to cryptocurrencies. While the success of any cryptocurrency initiative is not granted, if I may say, its objects, early investors may be well rewarded in the long run. To be regarded as a long-term success, and cryptocurrencies initiative must first achieve. Now I want to say again, what is cryptocurrency mining and how does it work? Let's see details. The process of collecting cryptocurrency as a reward for solving complex functions and recording data to a blockchain is referred to as cryptocurrency mining. But why do you individual mine cryptocurrency? The most obvious answer is that some people seek a second source of income and others want more financial freedom without the interference of governments or banks. For instance, crypto miners verify the legitimacy of transaction is exchanged for Bitcoin as a reward for their efforts. A cryptocurrency blockchain is constructed on the foundation of transaction. A blockchain is a collection of linked data blocks that include essential information such as cryptographic hashes. A cryptocurrency blockchain is a constructed on the foundation of transaction. A blockchain is a collection of linked data blocks that include essential information such as cryptographic hashes. The blocks that make up a blockchain are collections of data transactions added to the ledger's end. This add a degree of transparency, allowing network participants to see their transaction added client to the blockchain. The next phase in the crypto mining process is to compile a list of all transactions, which is subsequently included in a new unconfirmed data block. It avoids double spending of any cryptocurrency and keeps a permanent and public record by adding their transaction to the blockchain. Once the verification process is complete, the record is immutable, which means it can never be changed. How to use cryptocurrency for making purchase? You can do a number of things with cryptocurrencies depending on which one you own. On the most basic level, the definition of a cryptocurrency asset is that it can be used to send value from one person to another or to pay for goods and service. Each asset holds a value often priced in US dollar, which leads to another use case. Trading and investing aside from stablecoin, which seek to stabilize the instability of cryptocurrency by phasing an asset to something else. such as the US dollar. Most cryptocurrencies constantly. You can trade between cryptocurrency and national currency called fiat currencies on exchange depending on the trading pairs available on the platform of choice. If you are merchant, you can also accept digital assets as payments directly or through a payment processor or a service that is more convenient and add capabilities. Some services give the option to convert fiat cryptocurrencies into cash automatically on the back end, while there are also some companies that offer crypto top-up